Welcome, I'm Catherine Magana here with Steve Wolf, Greg Carroll, and Rachel Ivanovich, where we're here to provide you insights about the markets, tax planning, and financial planning. And today is February 27th. And since last week, we've had quite the movement in the stock and bond market. So we've seen the markets go down a little bit in value. Year to date, the Dow Jones is up about 2% this year. The NASDAQ is now in negative territory. It's down about 1.22. The S&P 500 is still up for the year. We're up about 1.27. And the Russell 2000, which is more the small cap stocks, is down to about 2.5%. So a lot of movement this last week. There was a lot of interest in seeing earnings come out from one of the AI chip companies, and that came out pretty positive, but the markets really haven't, taken that news, it didn't move it upwards yet. So that's something that's happened this last week. Also, we're looking at President Trump delayed tariffs. Originally, he delayed it till April 2nd, and now it looks like that is going back to the original date of March 4th, and that's for the Canadian and Mexican imports. So that's something that's kind of back on the horizon again with the markets. And then looking at kind of where the Fed is talking about lowering rates. Well, it sounds like they're not going to do anything for a little while, and potentially they want to get more information on inflation. So I don't expect any rate changes coming up in the near future. But there's still a lot going on in the markets. Like I said, we're positive in some areas year to date, but definitely a lot of movement over the last 7 days.
Well, there's a definite shift in what people want to buy right now. I was just looking at my portfolios that we run here at WWM, and if you're in the technology area, you're getting hit. If you're in the value area, which is most everything else, you're doing fine. Yeah. Our dividend income portfolio is up nicely, and the technology portfolios, our growth portfolios, are down.
And that happens. Like, they do kind of go in and out of favor. It's not uncommon for that to happen.
Well, it's not uncommon, except it used to be that a lot of stocks moved together, and then bonds were the opposite. Mm-hmm. But now it seems like you've got growth stocks and versus value, which are really extreme. Interestingly, I take a look at the CNN Fear and Greed Index every day, really, but the difference between last week and this week, I don't know who was asking me the question about, where we were, but we were in neutral last week. We are now in extreme fear. We went past fear and did not pass go, did not collect $200.
That's how quickly that happens, right?
And it's interesting because if you look at the different things that make up the index, momentum, stock price strength, put and call options, and junk bond demand, which are four of the areas, are all in extreme fear. Just so people kind of know what momentum is. That if you're buying something, you want to buy it. If you're selling it, you want to sell it. Stock price strength is the highs versus the lows in the New York Stock Exchange. So what's making new highs? What's making new lows? Obviously, there's more lows now than highs. Put and call options. Usually when people are afraid, they're buying puts because that protects you on the downside, whether you're doing it on a stock or you're doing it on an index. And then the junk bond demand, the safe haven demand was the other one that was in extreme fear, is stocks versus bond returns over the last 20 days. So when stocks are doing better, that's more positive. When bonds are doing better, it's more negative. The stock price breadth and the junk bond demand are in the fear category right now. Breadth means that these are the number of stocks on the New York Stock Exchange that are rising and falling, versus each other. And then the junk bond demand is the difference between the yield on the junk bonds and the treasury bills. So the wider that spread usually means that there's more fear,
And they're selling those high yield bonds.
Correct. Yeah. So we have had a dramatic change. Mm-hmm. Now, whether that is just short term or not, I don't know. You were mentioning the stock that came out with earnings, and we've mentioned this before. It's NVIDIA. NVIDIA is the company that everyone's looking to because they've got the biggest chips, the biggest amount of chips that they're selling.
And the fastest and the most powerful.
Right. And their stock price has gone tremendously high. Well, even they came out with earnings yesterday, which were really, really good, but yet today they're down. So that just tells you, you got to really be careful about what you're buying and selling. Don't just go out and buy.
So the momentum's gone.
Definitely the momentum's gone.
Or it has changed some anyways.
Right.
Yeah.
And we don't know if this is more of a, permanent type thing or just a blip. We don't know that yet. I still think for the long run, growth stocks, the tech stocks are going to do fine. But, look, nothing goes straight up. Okay. So, you just got to be careful. NVIDIA, who knows? I mean, maybe go up, maybe go down. Right today it's down. Who knows how far down it goes? It'll probably be a buy at some point, but I'm not so sure about right this second.
And that position is something that we look at either in our private portfolios or on an individual basis to see if that's appropriate for you. And that's one of the reasons why we don't like to mention individual stocks is because we want to make sure, it's not a recommendation, it's just a comment.
Oh, come on, let's be honest.
Yeah.
The reason we don't do it is because our compliance department says if we mention something, you buy it and you lose money, we get in trouble. So come on, let's be
get
fair.
real here.
Lots of rules. Another thing that's maybe playing into some of that fear is they just came out with the new housing contracts for people trying to buy houses is at an all-time low since they started keeping track of this in 2001. It dropped 4.5% from the month earlier, but it's at an all-time low. And, and I don't think it's just an inventory problem anymore. I think inventories are going up, but the high interest rates and maybe people are like getting a little stretched out there with maybe some higher prices. So maybe we do see some inflation numbers throughout this year coming down a little bit. So I think you mentioned, Catherine, that later in the year we do get some interest rate reductions from the Fed. It remains to be seen, but it's probably still a second half story. So
I think it's interesting that we have what's the mortgage right now? Around 7%?
It's
6.5 to 7%.
6.7 for a 30-year, and it's just under 6 for the.
On a historical basis, it's not really that high. It's a little bit high, maybe, but not much.
But we're used to recency
bias
down at 2.5 to
3%,
3%, right? I mean, a lot of people have those mortgages, so it's they think that's what they deserve, and so. But you're right, that's not a bad number.
I have seen more houses for sale around where we are, and I live in a community that it's a 55 and over community. I know you don't think
you're
I'm
over 55.
It's hard to believe. I know.
So wait a minute, I might be a few years behind that. I might be able to live there. Just kidding.
I still think I'm 30, but the body's aches and pains don't say that. Anyway, I'm living in a community that has about 1,700 homes, and for a while there weren't a lot for sale. The ones that were for sale were selling immediately. Okay. Now I'm seeing more houses for sale. It's taking longer to sell unless that house has really already been upgraded and it's really nice to begin with. But if you have to do something, those houses aren't really selling that much.
Mm-hmm. Unless there's an inheritance or something. I just spoke with a client this morning, and they're putting a family home up for sale because they don't want the house and they don't want to be a landlord, and they want the money. So I think those are kind of forced sales, but I don't know if somebody's in a home and they have a low mortgage if they want to move unless they want to downsize.
Right. I think the inheritance thing, though, hasn't changed a lot. I mean, that's, people die all the time. So
I feel like it's a lot lately, just in general.
But it's the people who are voluntarily selling their house that has changed a bit.
Yeah, and I do think some of those really cheap mortgages are, making people think twice about moving, right? They're going to stay in there a little bit longer.
They love their rate. They may not love the house. But
exactly.
If we didn't downsize from where we were, we wanted to downsize. Mm-hmm. If we didn't do that, I had a 2 3/8 mortgage. I'd have kept that for forever.
Yeah.
Because you can make more money, just buying a T-bill right now for 4 and something than you can paying that mortgage. So it makes sense for people to stay in their house. And I'm sure that has something to do with, perhaps the lack of inventory as being higher than it is.
Right.
So what about taxes?
I want to know, is Trump really going to get rid of the taxes on tips and taxes on overtime and taxes on Social Security? And it really was all over social media this week. I had somebody jump in my car and say, "Did you hear the news? And you don't have to pay taxes on overtime anymore." And I thought, oh, good grief, how are we going to do taxes this season? And is it retroactive was my first question, because whenever they introduce something new, it's okay. Is it taking? Is it going to start next year? Is it going to they're going to make it retroactive at the beginning? Do I have to amend 100 returns I've already filed so far?
Right, but that hasn't happened.
It hasn't happened.
It's like the rumors.
It's a rumor, but there was a
mill.
budget resolution that was passed on Tuesday, and it did include $4.5 trillion in tax cuts. But so there's a lot of proposals out there, and once all the proposals are included in the proposed budget, then the House and the Senate still have to vote on them. But it is on. It's out on the table, and so it's going to be interesting to see. And one of the big considerations that we're talking about in the tax community is, okay, so if they do cut taxes on tips and overtime and Social Security, what about? So let's just talk about tips and overtime. Those currently are subject to federal taxes and state tax if you live in a state that has an income tax, but it's also subject to payroll taxes. So if they cut the taxes on tips and overtime, will it still be subject to payroll taxes? Meaning, do you have to pay Social Security and Medicare on them still? So does it still have to be reported? So that'll be interesting.
This sounds like a great tease. Tune in next week to find out.
Exactly. well, people are talking about it. People want to. You don't want to pay tax on Social Security, and I don't think that you should have to.
He's only 55. He's not there
Oh,
yet.
that's right. I forgot.
No, I was 30.
Thanks for the
I'm sorry, he's
correction.
under 55. So.
But we'll see. I don't know. It's a hard tax season right now, so that's all we're doing is returns.
So talking about taxes, so Schwab did release some 1099s. So originally the date was supposed to be the middle of February, which some of the 1099s came out, but then they ended up having to take an extension, and so the extension is supposed to be to February 28th, which is tomorrow, but they just sent out emails over the last 24 hours that they've uploaded. So if you've been waiting for your 1099s from Schwab, which a lot of our clients have, make sure you check. So it sounds like everything's available.
Are you expecting
now.
any corrections? Because
Yeah,
I typically,
and that's
file
something-
people's returns, and then March 15th rolls around, and they get yet another amended
And
or
I think
corrected.
that's why Schwab took the extension, is
that's smart,
because
yeah.
otherwise there's going to be tons of corrections. So
I tell my clients all the time, don't be a rush to get your taxes done, because they always send corrected. Now, it's not always going to move the needle much,
Correct.
but if you're doing the taxes,
Telling you
Rachel,
what,
you want that corrected number on there.
I've had more people come to me. I've already e-filed their return, and they're like, "Oh, I got one more thing." Okay. Yay!
But you want them to give you whatever they have.
Absolutely, absolutely. So if you are waiting on a K-1, if you're waiting on
which those don't usually come out till end of
after March,
Yeah.
yeah. So if you're waiting on some sort of document, get the majority of your tax documents to your tax advisor, your CPA, early in the season, because we want to get started on things.
So as you're getting your tax documents and everything together and kind of revisiting your expenses from 2024 and what you spent, it's also a good time to also forecast, what am I projecting what are my expenses going forward? I know over the last 12 to 24 months, the cost of living has changed and things cost a little more, auto, home, you name it, everything's gone up. So it doesn't hurt to revisit kind of your lifestyle and your expenses and income coming in. We do, look at that, and if you need help, let us know. But that's part of the financial planning process, is making sure we have enough income, or what do you need to live on. And so as we do a cost of living adjustment in our plans, but we just want to make sure that we have that right information, and that you're aware of, have your spending patterns changed at all, or is it still in line with what you have in place?
It's helpful for your tax advisor as well when you come in to do last year's taxes to bring your projected income, or if you're going to have any life events, bring that with you to your tax appointment, because it's really helpful for us as advisors to help. Is your income going to go up? Is it going to go down? Are you going to be selling a big asset, so that we can help you, plan, give you vouchers, and really help you be ready for the year.
Or I was talking to a client yesterday.
Prizes aren't fun.
Yeah, and she's
Well,
like, I'm getting Social
some are.
Security now. So now that's new income that's going to be for 2025. As we're looking at some other planning, that's something that's important.
Bring the statement with you. I would love to see that. Bring if you're still working, bring a pay stub. If you are selling a piece of real estate or a business, we want to know that in advance. Don't spring that on us last second.
You talk about budgeting. I figured out a way to kind of offset my food expenses that have gone really high.
Don't eat.
I'm down to one meal a day. Yeah, thanks for taking my punchline.
Sorry.
She
I like that
snatched
idea. I
right
like
out of
that
the-
idea. I was like, I think I started doing that already.
Down to one meal a day, and that's almost done it as far as my budget is concerned for food. So, all right, anything else going on that we should know about for this week? All right, if that's it, then we will see you guys again next week. Thanks for listening. See you then.
Thanks.
Please stay tuned for important regulatory disclosures. WWM Financial is an SEC-registered investment advisor. The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. It is only intended to provide education about the financial industry and how we may be able to assist. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Any past performance discussed during this program is no guarantee of future results. As always, please remember, investing involves risk and possible loss of principal capital. Tax considerations presented may not be appropriate for every individual circumstance. A tax professional should be consulted before making any decisions about your tax liability.